So with these things, we have margin requirements, leverage, and better than leverage on ETFs. And that is very true. I'm going to start from the bottom and actually work my way up. So one of the issues that we have with ETFs are leverage. Now, a lot of the times for leverage, we use leveraged ETFs, right? Which allows us basically to trade, like for instance, like you could trade like NVIDIA L, right, or NVIDIA S, right, or one of these leveraged ones, and they trade at a similar price movement, but they're significantly less in price, so you can buy a lot more, and they move faster, so you can buy more and they move further, right? And this allows you to trade these levered ones, but the leveraged ones are incredibly dangerous because leveraged ETFs and leveraged indexes or stocks have horrible spreads, right? So there's a lot of slippage when you trade these, and it's very difficult sometimes to get proper fills as well because not a lot of them are highly liquid. One of the reasons we like trading NVIDIA A, right, versus NVIDIA L, right, is because NVIDIA A is the stock and it is highly liquid. So when you trade it, you get in and get out very easily. But on the leveraged ones, those are not being carried. There's not as much float. So it's not as easy to get in and out of positions. Leverage instruments, right? Futures allow you to control a substantial contract value. And we'll talk more about this, but a normal, like a full size contract of the ES has almost a $500,000 value to it, right? It's a big contract, but in order to possess that contract, you're actually only required to have about 1/100th of the cash on hand in order to carry it. So for instance, like when you're trading micros, those micros actually have a fairly high value. The micro itself probably costs like 50 grand, right? But CME only requires you. It's kind of like, imagine like leasing a vehicle. This is the best analogy I have for this. Imagine it to be like leasing a vehicle. When you lease a vehicle, you're going to give the car, you're going to give a down payment, good faith deposit, right? And then you're going to drive the vehicle for a while, pay the cost of the vehicle, and then when you return it, you don't have to have the vehicle anymore, right? And you can get your good faith deposit back depending on the lease, right? So this is kind of the same thing. You're going to give like basically a good faith deposit, which is normally a significantly smaller amount. So for instance, this is why, we'll talk about account size. This is why with a $4,000 account, right, you can actually possess a fairly considerable amount of margin, right? You can, with only a $4,000 account, you can hold a $50,000 instrument because they only require you to pay a certain amount to hold the instrument, right? And you get a certain amount of margin from your broker itself. Many of your brokers, right? So the initial margin requirement, right? So the margin requirement for a futures product fluctuates, but it's typically around 3% and 12% of the notional value of the contract, right? So sorry, I know this is the nerdy part, but I want you guys to understand it, right? So for instance, when M&Q trades at 25,000, right, that you're only talking about needing like 3% to 10% of its notional value, right? This is why you only need like 2,500 bucks, right? So to carry one. But if you've got 5,000, you could carry two or three of them, right? You're going to be taking $150,000 worth of positioning technically, right? But you only need the notional amount. Now, margin is what your your like interactive brokers or one of them gives you, right? With your IB, right? Interactive brokers or one of those, you get margin. So interactive brokers, for instance, for futures will normally give you about 4 times margin on your account, right? So you're talking about having like 20 grand worth of margin on 5 grand, right? And then you only need like 3 to 10% of the cost of the contract. So this is why even with just a $5,000 account, you can carry 2 to 3 contracts of M&Q or MES. Now, on, and I'll talk to you about managing risk on these in just a moment, right? But I assure you when I say this is one of the few instruments you're going to have, and I've done, I was telling everyone in here, I'm doing a small account challenge with my mentees. So just to kind of make things fun, so I trade on my big accounts and then use my copy trader with those. And then I also have a second IBKR account I've opened that I'm just doing small account trades in, right? Just to show my mentees how much money you can make. I put $4,000 into that account, right? And right now, after a few days, that account is almost at 5 grand. It's at like 4780 or something, almost 4800. Hello, Market Alchemists, and thank you for watching this video. We hope you enjoyed it. Please make sure to watch the next episode. And before doing so, like and subscribe.